So now you know how to identify a great business with all these fundamental factors. How do you find these businesses? How do you screen to select the best companies out there in the markets? So for US markets, you can simply go on to Finviz and use their free screener. So you just go on to Finviz, go to screener over here. And you can see that in the entire database, that's 7,452 companies that are listed on the US exchanges. So you can screen for fundamentals. Let's click on fundamentals over there. And again, so if we want to build a watch list of great businesses right now, what would we select? Let's take a quick look. So let's start with this column over here. Now, as you know, PE ratio by itself is meaningless, so I'll leave that as any. What's important will be earnings growth for the next 5 years. So I want the company to have a positive growth potential. So again, how much growth you want to put is really up to you. All right. So again, if you put a higher growth rate, then of course you have got less companies that meet that criteria. If you put lower growth rate, you've got more companies and be less strict. So it's up to you. So we could start off with putting maybe 10%. So immediately you can see out of 7,000 companies, it has screened it down to 1,850 companies that are projected to grow at 10% or more in the next 5 years. Next, return on equity. We could set a criteria of over 10%, right? So remember that for return on equity, we want it to be above 12 to above 15%. So there's no 12%, so the closest will be 10%. And we can then manually filter out those below 12%, right? The next one would be sales growth for the last 5 years. So again, if we're investing in a business, we want to ensure that it has got a consistent historical sales growth rate. So we can place it at, again, you can put it over 5%, over 10%. It's really up to you. We could start with over 10%. And again, if it becomes too strict, we could make it less strict. Or, if there are too many companies, we could make it even more strict. What else is important? Gross margin. Now, I wouldn't select anything here because it really depends on the industry, right? It's not saying that a gross margin of over 50% is always good. So it's industry specific. So because of that, I won't select that one. And for some reason, Finviz has a strange way of calculating debt to equity ratio. And that's why I've not selected it. All right, because I prefer to do it manually. Now, PEG ratio is something we talked about in lesson 1. We'll talk more about it in the lesson on valuation. So PEG ratio is kind of like a shortcut to tell if a stock is expensive or cheap. So we could put a PEG ratio of under 2. Okay, so again, if you put a PEG ratio of under 1, you get really undervalued companies. But you may miss out on some really good companies that are slightly above 1 in PEG ratio. So I'd rather put under 2 and again manually filter out those that are way above 1.5 or 1.6. Right. Earnings growth this year. Do I want the company to be growing this year? Yes. So again, I can put it as over 10%. Earnings growth quarter over quarter is not as important. More important if you're a short-term trader, but as an investor, that's not as important. I'll leave that. Current ratio, you may want to put a current ratio above 1 so that we filter out companies that are not as financially strong. Okay. Earnings growth next year. Yeah. So we want the company to be growing next year. So again, over 10%. Earnings growth for the last 5 years. So again, we want the company to have a consistently increasing earnings in the last 5 years. So again, put over 10%. So there you go. All right. So after placing all those filters, we have screened from 7,000 stocks to 66 stocks. Right. So these are some of the stocks applied. Opto Electronics, Exelis, Alliance. So some of them are familiar names. Some of them I've never heard of them before. So again, what you can do with this list of 66 is to then study them closer and go through the steps of analyzing a great stock, which we'll be going to in the lessons to come. You can also filter for, in terms of descriptive, right? Certain stocks you may want to look for. For example, you may say, okay, I only want stocks in the financial sector, for example. You could screen for that, or only stocks in the healthcare sector. It's really up to you, but I'll just leave it as any at this point of time. You can also select and screen for only very big companies, mega cap companies with a market cap of more than 200 billion, large cap, mid caps. It's up to you. So for me, it doesn't make a difference if it's a big company or small company, as long as the fundamentals are great. So I'll keep that as any. All right, so that's about it. And in the next lesson, when you learn about technical analysis, when you learn that we want to identify ideally stocks on an uptrend, you can then go under technicals and screen for the technical criteria as well. So we'll just leave it as that, as to just screen for the fundamental criteria and getting the list from there. All right, so if you're looking for markets outside the US, you could check out this website, which is investing.com, which has a free screener as well. Not as comprehensive as Finviz, but it's better than nothing, right? All right, so on to investing.com. You go to markets and stocks, and you can check out the stock screen over here. And you can see they list practically every market in the world, all right? So the other market which I look at would be the Hong Kong market, because again, I've mentioned it's really undervalued right now, and some great companies there from China, which is again the fastest growing economy in the world. So let's check out Hong Kong. And again, Hong Kong market is open to foreigners. So whether in the US or in Singapore, you can easily trade Hong Kong stocks through a broker like Interactive Brokers that accesses about 26 markets out there. Okay, so let me check. Where's Hong Kong? Okay, there we are. So you can see that in the screener, there are altogether 2,252 stocks listed in Hong Kong. All right, and of course, companies like Tencent is one of the largest companies in the world right now. Okay, Bank of China, China Mobile. So you could use the screen over here, and again, you could screen for PE ratio, market cap, 1 year change, dividend yield, and average volume. All of which to me are not that important actually. The only thing that could be important would be dividend yield if you happen to want to buy the stock specifically for dividends, but if not, then it's not that important. What's more important would be under ratios, where what I find important would be over here, which is the earnings per share for the last 12 months versus a year ago. So basically it's telling you what's the earnings growth over the last 1 year. So I'm going to click on that. And again, you can put your minimum growth and your maximum growth. Obviously, I do not want to have a maximum. So minimum, I may put a minimum growth of say 10%. Right, so immediately from 2,000, we are filtered to 1,000 stocks. Next would be 5-year earnings growth rate. So for the last 5 years, we want the earnings to be growing at least, again, say 10%. Sorry, I apologize. This should be 10%, not minus 10%. Okay, so if you put in these two filters, you're down to 241 stocks out of 2,000, right? Next, sales growth. TTM means, again, the last 12 months versus a year ago. So the last 1 year of sales growth, again, you could put a minimum of 10%. 5-year sales growth for the last 5 years, growth of at least, again, 10%. And again, 10% is just an arbitrary number. You could put 15% or 12% or 20% or 5%, is really up to you, how strict you want to be. All right, so besides that, the rest are not important. Price, volume. Now, you may also want to just focus on stocks with sufficient liquidity and volume. So you may want to put an average volume of at least 100,000 shares, or at least maybe 200,000 shares. Okay. The fundamental, you have again, they've got gross profit margin and net profit margin, but it's not a comparable thing. Okay, it's a figure which, again, it really depends on the industry. So to me, all these are quite irrelevant. Okay, and again, you can put in certain technical indicators once you've learned the lesson on looking at the technical analysis. So for now, it's just, again, putting in the main fundamental criteria that ensure that it's a growing company. It's been growing for the last 5 years at least, and you're down to 115 companies. And again, some of them are pretty well-known names like Tencent Holdings, Ping An Insurance, which is the biggest insurance company in China. You've got AIA Group, China Life Insurance, and so on and so forth. So again, from this list, you can again do further research to look at again the balance sheet, the income statement, and so on and so forth. But this helps to narrow it down to some of the best companies in a particular market. All right, so for that concludes this lesson on fundamental analysis. It's Adam Khoo, and I'll see you in the next lesson.